Okay, so I will explain how the US buys money, who pays for the debt of United States, and how is it related to the value of US dollars. There is a grave misconception that when United States need money, they just literally print it and then bail themselves out, which is not true. And I'm gonna explain the cycle. There are two different cycles involved in this process, and both should be understood clearly. The first is that the treasury, when the government needs money, when there is a deficit, to fund that deficit, they need money. So the treasury issues bonds in open market to get that money, which is used to fund the deficit. They issue those bonds, and those bonds can only be bought through United States dollars. So if you want to buy those US treasury bonds, you need US dollars, and that is what makes the demand for US dollars a little higher. But they just do not print the US dollars, they issue bonds which others buy because they trust the US economy, and hence they convert their own currency into US dollars and then they buy those US treasury bonds. The other process is called quantitative easing, which is very different on how the US manages the volatility around their dollars or the economic cycle in an entire sense. So when the US wants to fuel the economy, the Fed comes in, they start to buy those bonds which have been issued earlier by the US Treasury, and they start buying those bonds. So the demand for those bonds go up. People start to sell out those bonds, and especially banks. What they get in exchange is money. So now the banks have money because the bonds which they accrued from the past, they're selling it off to the United States Fed, and then they have money. This money is what they lend out to everyone, and that leads to the economic growth because then the people have more money which they can spend, which they can invest with, and then that economically and then eventually brings the US economy back to where it was earlier. But that has got nothing to do with US dollars value. The US dollars value is mostly driven by the demand through two or three things. One is because it's stable, people want to buy those treasury bonds, they buy it with US dollars, and because a lot of the trade happens in the world with dollars, they want to buy a lot of dollars in that sense.